Welcome to today's broadcast. My name's Lark. If you're new around here, of course, very excited to see you today. We got a lot of big news, of course, for the cryptocurrency industry. As always, I always say it's big, but it is always big. What has been happening during the last year in crypto? Well, let's just say this year for 2023. Maybe we won't go back into 2022. There's a lot of grim memories from 2022. I still have a bit of PTSD. Let me know if you do too, of course, down in the comment section. But lots of big news happening right now. I want to go over some reasons why the coming rally is going to surprise a lot of people. I also want to dive in a little bit to the whole Bitcoin ETF conversation because we have some new news around the Bitcoin ETF conversation, as well as potential implications for a Bitcoin ETF. Also, I want to discuss, how to make your first $1,000 in crypto. Something I feel a lot of people struggle with. And if you're new to crypto, you might be feeling a bit overwhelmed. So I want to discuss that with you. And of course, if you've been around in crypto for a while, you might just need some refreshers now that we have a new cycle moving forward on how to make some money. So we'll be covering that as well, of course. So first, here are a few important reasons why this coming rally is going to surprise a lot of people, why it's really not going to be what people expect. People aren't really ready for it yet, how crazy it's going to be. I want to start off with this right here. JP Morgan raising U.S. economic growth estimate, no longer expecting a 2023 recession. Curious. Is it psyops? Think about it. Markets are nearing all-time highs. It'd be the perfect time for the Wall Street banks to pull the rug. Or do they know that we know, that they know, that we know, that we all know that they're pulling psyops on us on a regular basis? And so they're doing this thinking that we're going to think that it's psyops, but it's not actually psyops. There isn't going to be a recession, and markets are going to blast off to new all-time highs. Tech stock investors, the new paradigm of money. Of course, superconductors and microchips and AI is all the new paradigm of money. At least if you're a tech stock investor, of course. Cryptocurrencies lagging a lot behind, going through our usual cycles, it seems, unfortunately. But hey, that's crypto, man. If you don't expect this, then you're not paying attention, I guess, because this is what's going on in crypto on a regular basis. I want to remind you, too, of kind of the general idea behind cryptocurrency cycles. So TA Analyst posted this over on Twitter. I've shared some pretty similar charts, but I like the way that he laid it out here. Basically looking at how the cycles play out. So in 2011, of course, was the bear market correction. 2012, we start having the move up. 2013, the big rally. 2014, bear market, massive correction, prices down 80% for Bitcoin. 2015, accumulation year. 2016, things start taking off, Bitcoin halving year. 2017, of course, the big blow off market cycle. 2018, brutal bear market ensued. 2019, had a nice little rally. 2020, of course, the big COVID crash, followed by the Bitcoin halving, followed by a new all-time high by the end of the year. Just barely, though. We got to like $22,000 something by the end of the year. 2021, of course, we had the move up to $64,000 and then $69,000 later in the year. Very exciting times. 2022, brutal bear market. Are you starting to see the pattern here? 2023, where we are right now, an accumulation year, most likely. Things can always change. We can find new depths of despair and pain where there'll be pulling of hair and gnashing of teeth. But most likely, 2023 is an accumulation year. A lot of what I'm seeing in the charts, the on-chain data, et cetera, is saying, yes, this is an accumulation year. Now, an accumulation year, that doesn't mean the price is just going to go up slowly. But what it could mean is that we get some nice buying opportunities throughout the year. We've seen, for example, that after the Bitcoin ETF news, the price of Bitcoin's kind of just been stuck in this really tight range. It's been kind of interesting to watch it all play out as it has been going so far for the past few months. But I feel like it's an accumulation period right now in the market where I've been buying. It's been feeling feeling like a pretty nice time to be accumulating positions that I hope will pay off in late 2024, early to mid 2025, when I can exit the market and buy a boat. I don't know. And of course, that late 2024, early 2025 market blow off top scenario is something a lot of people have been talking about, which might make you think, well, everyone's talking about it. Surely it's not going to happen. Not a lot of people hanging around here at the moment. It's been pretty quiet recently, in case you haven't noticed. I also want to point this out here. This is from Sentiment. They say there are currently 15,870 Bitcoin addresses that hold at least 100 Bitcoin. Collectively, these whales own 11.5 million coins, making up over half the total existing supply. Wowzers. Over the past 12 weeks, their collective share has risen by 27,755 coins, which is about a month's worth of supply from the miners. So you might not think, well, that's not that crazy. It's a lot of coins. It's a lot of coins that they have been accumulating. Obviously, when we see big buyers like MicroStrategy come in, that really moves the needle quite a lot. But big accounts have been adding coins. And as we've discussed at great length, small accounts have been adding coins. In fact, small accounts have actually been outpacing the whales in terms of buying, which makes sense. There's a lot more of us than there are of them. And yeah, they got more money. But small accounts collectively are pretty well funded. As Bitcoin News calls this, the Great Shrimp Awakening. So those less than one Bitcoin have been accumulating 33,800 BTC per month, which is about 8,000 more Bitcoin than are being produced per month. This group of buyers, just the shrimps, they have not stacked this hard since the 2017 top. The buying behavior of small accounts during this current cycle is actually unlike anything we've ever seen before for Bitcoin, where we have such strong buy pressure coming in from just regular retail investors, people like you, people like me. Regular people out here buying up truckloads of Bitcoin. It's pretty awesome. And keep in mind, the Bitcoin halving is coming very, very soon. So right now, whales are gobbling up supply. Regular retail investors gobbling up supply. MicroStrategy, they're doing a Class A, was a Class A stock offering, something like that. They're raising $750 million more, which they're going to spend a lot of that money on buying Bitcoin. And I'll tell you this, $750 million, well, they've got to spend some of that money to do something at MicroStrategy to keep running their actual business, not just buying Bitcoin. But let's say $600 million of that goes to buying Bitcoin. $600 million, in case you haven't noticed, buys a hell of a lot of Bitcoin. A hell of a lot of Bitcoin. And demand is going up. Bitcoin ETFs are coming. And in less than a year's time, the miners are going to go from producing 900 coins a day to 450 coins per day. Supply side crisis is coming, at least at these kind of prices, which is very interesting. Ali charts here pointing out we're observing a surge in buy side demand for Bitcoin, spot side demand, right? Stable coin inflows to crypto exchanges are now outpacing BTC inflows, indicating heightened buying interest. Basically, more cash is going in than Bitcoin is going in, meaning more people are on the buy side of the equation than on the sell side of the equation. Right now, the biggest sellers in the market, of course, have been the Bitcoin miners, largely. Some people as well just getting out, because around $30,000 is actually the break-even price for a truckload of Bitcoin. A huge amount of Bitcoin also changed hands around like $28,000, around $25,000. Like we're talking hundreds of thousands of Bitcoin. Giant percentages of the supply of Bitcoin changed hands right around those levels. So that means that there'll be some people who might just want to get out, get their money back or most of their money back, and walk away and forget about this whole Bitcoin thing. But the majority of those people who bought their coins, and a huge amount of coins, mind you, around those price levels, they're not selling right now. They're chilling. They're chilling. They don't need to sell. And so they're waiting for higher prices. So they're not sending the coins to exchanges. to dump them. It's really just miners. Miners are a cash business. Some people are like, oh, those miners selling Bitcoin for, don't they know what's going to go to the moon? Yeah, the miners know it's going to go to the moon, but they don't care because they're running a cash business. They have investors that expect cash payments. They have electricity bills. They have to buy new machines all the time, et cetera, et cetera, et cetera. The margins are tight. And when they can sell a coin for a profit, they do. That's the Bitcoin mining business. They provide a valuable service. They're allowed to do whatever they want with their coins. So don't worry too much about when Bitcoin miners sell, because eventually their sell pressure is not going to be able to do very much anyway. By the way, if you are a cryptocurrency trader, you got to get yourself an account over on BYBIT. It's the best place for trading coins. If you want to do futures, they got it. You want to do exotic spot altcoins, they got you covered on that too. Copy trading, they got it. And I'm going to use that link down below in the description. You can start your account and you'll get up to $30,000 in deposit bonuses and trading bonuses, as well as exclusive fee discounts. So go ahead and check it out. Link in the description. Now, I want to share this chart here with you from Matthew Hyland. He put it up. I could have put up another chart, but hey, you know, he's got it pretty well laid out here for us. So Bitcoin weekly Bollinger Bands have continued to tighten to the most extreme conditions ever. Bollinger Bands with indicator has plunged to its lowest level in the entirety of Bitcoin's recorded price history. We are at right now basically one of the periods of lowest volatility in Bitcoin's history. I saw a chart posted earlier. It was of Kraken, one of the biggest exchanges in the United States. A 20-minute period where the price didn't move by $1 for Bitcoin. It was completely flat. This doesn't normally happen. This is a very rare thing to see happen. Very rare. Same, we've shared that data from BINANCE as well. The market is dead right now, volume-wise. The volatility, dead, which means something pretty crazy is going to happen. Something pretty crazy is going to happen. Periods of very low volatility are often followed by periods of high volatility. It's just that simple. It's just that simple. So keep that in mind. Obviously, we hope that it's upside volatility. There's a lot of things working in our favor right now in the markets, but that volume is crushingly low. This is a chart here of Bitcoin trading volume. And basically, we've seen volume just going down. And this is denominated in Bitcoin. But this is July was the lowest month in 5 years. Crazy stuff. Volume's absolutely bottoming out here, which realistically, if you start thinking about it, that's kind of a signal. No one's really that interested in crypto right now. No one's really that interested in Bitcoin right now, especially when tech stocks are all doing so well. But that boredom, in my opinion, is opportunity. Because while everybody's not paying attention, of course you guys are. If you're here, if you're listening to this conversation, you are paying attention. You know what's going on. You're dialed in to the potential of the cryptocurrency market, of the asset class. And while others are only going to come back and buy at the new all-time highs, you're not. You're accumulating while the prices are good. Because I'll tell you what, when you look back in a year's time or 2 years' time, you're going to see all these people who are posting and saying, gosh, if only I could have bought Bitcoin when it was $30,000. When Bitcoin, of course, is $100,000 in 18 or 24 months or whatever it might be. You're going to see all those voices, but you were here now. You were here now. You were dialed in. You were paying attention. You were the one who took the opportunity when it was presented to you. And of course, we have other catalysts too. For example, Elon Musk's X app. Likely, of course, going to be integrating cryptocurrency payments. Of course, Dogecoin will benefit from this. Bitcoin, hopefully Bitcoin Lightning will benefit from this. Stablecoin transfers, all that kind of stuff. Elon's a clever dude. The only question is whether he thinks it's going to be regulatorily possible to do these things if you can do it without getting into much trouble. So we shall see. But look, all this stuff is coming together. All this stuff is coming together. These reasons I've just laid out here to give us a situation where the market has a great opportunity for rallying. Think about it. If there is no recession, if we really do pull off the soft landing, which may be a psyop still, but if we really pull that off, if we get the X app coming out, which could onboard literally tens of millions of new people, maybe even hundreds of millions of new people into cryptocurrencies, that means something. That's powerful. Volatility is super low, meaning that we are basically a powder keg primed for an explosion to the upside, hopefully, not a complete collapse and devastation. But that low volatility signals that the market is in this moment of like, it's just like a spring being pushed and pushed and pushed and pushed and pushed and pushed and pushed until it just goes. So very exciting times in the cryptocurrency industry right now. Very big potential for the cryptocurrency industry right now. And I think that nothing really exemplifies the big opportunity in crypto right now like the Bitcoin spot ETF. And I know it's something we've talked a lot about. We're going to continue talking a lot about it because it's probably one of the biggest narratives that has the potential to be that absolute spark that explodes the market. Because that's what we need right now. We need that new spark. Look, there's been a lot of money being made so far in 2023. Lots of money. Lots of little coins that pop off and do 10, 20, 30, 40, 50, 100x, whatever. That's been out there. Those opportunities have been there. Definitely been the on-chain summer, as some people are calling it. But those opportunities for gains have been out there. But they've been small coins, something that a big institution can never ape into. They can't ape into $1 million market cap coin. Regular people can. We can throw a few $1,000 in and hope for the best. But when we talk about these big institutions, they need big liquidity coins, big market cap coins. And when that money starts flowing into the top at Bitcoin, Ethereum, and I think we'll get Ethereum ETFs shortly after Bitcoin ETFs, especially if Grayscale wins their case, which a lot of people are putting the odds heavily in Grayscale's favor right now. We'll see, of course, how that plays out if they do actually win their case. But if Grayscale wins their case versus the SEC, that opens up the ability for them to launch a spot Bitcoin ETF. That ruling would likely apply to Ethereum as well, which means we get Ethereum ETFs very shortly thereafter. Which means that all the world's big funds, all the retirement accounts, et cetera, can now all go out and ape into Bitcoin ETFs and Ethereum ETFs. Now, it's been speculated that a Bitcoin ETF approval could bring $20 to $30 billion of buy-side pressure in for Bitcoin, which would basically gobble up every Bitcoin off of Coinbase, which is the chosen partner for all of these Bitcoin ETF products. Be basically all of Coinbase's Bitcoin. It would be about a third to half of all Bitcoin available on the market. Of course, at the current prices, when that kind of buy pressure comes in, prices are going to skyrocket. It's not going to take that much Bitcoin off the markets. People who've been dormant for a while will come in and sell their coins into the hype, et cetera. But you get the idea. It'll really change the markets. And if Bitcoin gets $20 to $30 billion worth of interest, well, what's Ethereum get? Half that, a third of that, a quarter of that? Because I'll tell you what, $5 to $7 billion of Ethereum buy pressure is going to move the needle a lot. Remember, supply is going down, decreasing all the time thanks to the burn. We have 21 million Ethereum staked in the staking contract. Supply side crisis for ETH is already here. All we need again is that little spark, and it'll send markets going crazy. Now, on that Bitcoin ETF news, Global X has filed an application to list a spot Bitcoin ETF. Welcome to the party, guys. Yet another Bitcoin ETF application has gone in. But why are BlackRock and other companies pushing deeper into crypto? What is the opportunity that they are seeing? Well, they see it as, of course, a significant revenue opportunity. The world's largest asset manager is planting a flag in the ground and saying it believes Bitcoin will matter for the next 5 or 10 years. BlackRock CEO Larry Fink also talking about Bitcoin, saying it could revolutionize finance and that he wanted to make it cheaper for investors through an ETF. Good old Larry Fink, our friend, our good pal Larry Fink, just wants to help out the regular retail, the small guy. This is what BlackRock has always been here for: you, the little guy. BlackRock's always watching out for you, making sure that you can get ETF products at the best available price. Yeah, if you believe that, I got a bridge to sell you guys. Nevertheless, BlackRock is getting involved in the game. And of course, the potential for BlackRock to really shake things up is massive beyond belief for a variety of reasons, not just that BlackRock controls $10 trillion worth of assets, not just Larry Fink, one of the most powerful men in finance, is out there, well, pumping up our Bitcoin bags to his audience of people, of managers and institutional investors and family offices and all this kind of stuff. BlackRock sees the potential to get the ka-ching from listing these ETF products, but also to start locking up massive percentages of the supply so that they can run their usual price manipulation tactics, just like JP Morgan has been doing in the metals markets forever, just like, of course, BlackRock does for a lot of different things. So to see BlackRock involved, they go with a grain of salt, if you will. Also, I liked this chart here. I want to share it with you. So this is BlackRock's top 25 equity holdings. Remember that old saying, BlackRock, they own everything. They own the world. Well, it's true. They have gigantic stakes, and a huge amount of companies, enough power in these companies that they can get a lot of what they want as top shareholders. So, for example, they have $170 billion worth of Apple stocks, $155 billion worth of Microsoft stocks, $51 billion worth of NVIDIA, $62 billion worth of Amazon. Now, what happens? Tinfoil hat theory, potentially, or just a theory. Maybe not one tinfoil hat for this one. What happens? BlackRock gets their Bitcoin ETF approved. And then BlackRock starts going to all these companies. Hey, your cash is trash. You guys know your cash is trash. Apple, Amazon, Microsoft, et cetera, et cetera. These are some of the companies with some of the biggest piles of cash in the world. They have tens to hundreds of billions of dollars, depending which company we're talking about. What happens when they get that call from Larry Fink saying, hey, look, we got a Bitcoin ETF now. You got all that cash sitting there. It's not doing anything for you. Why don't you put it into our Bitcoin ETF? And he'll start going through the numbers. Look, Bitcoin's outperformed year over year, blah, 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 blah. The usual kind of spiel that we make all the time, but the Larry Fink is now making. What happens if Apple puts $1 billion into Bitcoin? It's nothing for Apple. It's like 1% of their cash, if even. That creates a mania because suddenly Apple bought Bitcoin. Is Microsoft going to miss out? No, Microsoft's going to have to buy some Bitcoin too, and so on and so forth. And then you have a rally fueled by these giant war chests of these mega corporations. It's a possibility when you consider that BlackRock has a controlling stake in, not controlling stake, I should say a stake that has major influence in a large percentage of these companies. Also, let's do some more fun moon math here. This is the gold ETF, well, top 5 gold ETFs. So SPDR has about 60 billion, iShares close to 30 billion, VanEck around 13 billion, rounding up on a few of these, VanEck around 4 billion, and SPDR gold mini shares 6.3 billion. A lot of money. Top 5 gold ETF products together, they account for over $100 billion. Gold, obviously, it's a bigger market, but then you also have to account for all the gold that's being used for jewelry and for bullion and central banks and all that kind of stuff. So $100 billion of ETF products alone, pretty big deal. Gold, I like gold, but it's not that exciting. It's kind of boring. It's kind of, boomer metal stuff, right? What about Bitcoin? Bitcoin comes out. We get ETF products. It's exciting. It's new. It's fresh. It's cool, right? Remember, the estimates are 20 to 30 billion in buy-side pressure for Bitcoin when we get an ETF product released. There's a lot more excitement around Bitcoin than there is around gold. And if gold can have 100 billion plus all those numbers for the top 5 at up closer to around 110 billion. Seeing $20 billion flow into Bitcoin ETFs is not crazy at all. It's only 20%. And I know the market cap of gold is much higher compared to this market cap of Bitcoin. Bitcoin's $500 billion, gold's 12, 13 trillion. So it's not exactly a like for like comparison here, but you get the idea of the big potential. Because if gold can capture 100 billion plus, Bitcoin can capture 20 billion. I don't think it's crazy at all to think that that's a very real possibility. By the way, if you're not signed up to the Wealth Mastery newsletter yet, you're straight up missing out on opportunities in this market. Every single week, my team and I work hard. We spend about probably 40 hours a week writing this newsletter so that you can get the latest that's happening in the market, the most important news happening in the market, the latest updates on DeFi, altcoins, altcoin alpha, NFTs, airdrops. Some of the airdrops we've covered have literally made thousands of dollars for investors. All you had to do was open up our free newsletter, click a few buttons, bada bing, bada boom. It is value packed full of alpha. So check it out. It's free. Link in the description. You can go to thewealthmastery.io. Again, that is thewealthmastery.io. Also, want to point out we do have a altcoin review of WorldCoin. So for those of you looking for a bit more information on OpenAI's, well, it's not OpenAI's, but Sam Altman, the founder of OpenAI, also the founder of WorldCoin. If you want a little more information on that, go and check it out. We got that over on the website now as well. Now let's look at the Bitcoin ETF timeline here. So the ARK Bitcoin ETF, it is going to have its second deadline coming up August 13th. So that's next week. Most likely that gets delayed. There's always the, off chance that, hey, the SEC wakes up and feels we're in a good mood today. Let's just approve this Bitcoin ETF by ARK. Let's put a big old thumb up our nose here to BlackRock and say we're going to give ARK the Bitcoin ETF first, and you're just going to have to wait, BlackRock. Does that sound like the most likely scenario to you? It's possible, but not the most likely scenario. It's BlackRock, guys. Come on. But what's interesting, check this out. Second deadline here. Look at all these ones that fall right in October. iShares, October 17th. Bitwise, October 16th. VanEck, October 17th. WisdomTree, October 17th. Invesco, October 17th. Wise, October 17th. Valkyrie, October 19th. Pretty interesting stuff, isn't it? Maybe October will end up being the big month for Bitcoin. Now, often summer months, by the way, summer for Northern Hemisphere, winter for us in the Southern Hemisphere, of course, but winter, summer months, just say July and August. July and August tend to be pretty boring months in general for markets. September as well tends to be a bit of a boring month. October, November, December, everyone in the Northern Hemisphere is inside because the weather is cool and they're all aping into tech stocks. They're all aping into crypto coins. Those tend to be very exciting months in the markets. Imagine if we get a spot Bitcoin ETF approved in October. It'll be quite the end to the year if that is the case. Could happen. Again, historically, August, September, quieter months. October, November, December, more exciting months. So we'll see what happens if that plays out again this time. Also want to share this chart here with you from Stock Money Lizards. Looking at Octobers, we tend to see some big moves in October. Again, this is just based on the month, right? And this isn't the best way to predict markets by any means, but it is interesting that we do have these parallels that do tend to form up a bit in markets. We may not get too much exciting happening before a Bitcoin ETF is approved. We may not have that much exciting before the Bitcoin halving even next year. Even if we do get a Bitcoin ETF approved, maybe, hey, it's still just too quiet. Everyone's a bit too pessimistic on Bitcoin, and we're over predicting the impact of an immediate impact of Bitcoin ETF. So we'll see. We'll see. But hey, it's interesting to point out that yes, markets do tend to do well at those times of the year. Also, to point out this one here for you too. And this is actually a very interesting one. It's from the Rational Root, on-chain supply distribution. So we can see we've had huge amounts of coins trading hands at certain price points. For example, we had huge buying coming around $16,500. That's the November 2022 bottom. It is one of the biggest on-chain supply distribution dates. Then we come up to 26, 27, 28, 30, $31,000. This is the biggest base of Bitcoin. This is where a huge percentage of the coins have traded hands. And as the Rational Root points out, the market is very bottom heavy right now. Now that works for and against us. Works against us if we have a terrible market crash, because a lot of people might just take big losses on their coins, get out, etc. And that means there's a huge amount of supply right in this area that could be dumped at a loss if people start freaking out. The flip side is that if we get even the tiniest spark of enthusiasm coming back into the market, we have the potential to rally big time, because there's not a lot of resistance overhead in terms of previous prices that Bitcoin has changed hands at. So the on-chain supply distribution for higher prices is very, very small. Most of that money that bought over 50K, for example, already capitulated. So going up, there's not a lot of price resistance. There's no massive areas where there's just going to be huge amounts of people looking to sell and get out of their coins to break even. The biggest one is probably around $38,000. That's the biggest zone of where, well, about 1% of the supply, around $38,000 to $39,000, has changed hands. Significant, noteworthy. But after that, not a lot. $48,000 is less than 1% of coins that have changed distribution hands. After that, there's basically nothing, meaning that there's not a lot of sellers over those levels, forced sellers, right? People can come in from the bottom, take the profits, obviously, but there's not this giant cohort of people waiting to get out of break even. It's important to keep in mind, if you ask me. Now, one other thought here is this. We talk a lot about the cycle. We talk a lot about, well, how, okay, this is going to happen and this could happen and all predictions. No one knows the future. Obviously, me least of all. But we have this belief. Well, look, everyone knows about the Bitcoin cycle. Everyone knows about the Fourier cycle at this point, right? Everyone's predicting a big bull run coming in 24, 25. Everyone's calling for Bitcoin to top out at $150,000 or $180,000. Everybody's wrong. We're going to zero, baby. We're going to zero. Or we're going to $1 million. Opinions are divided, of course, on those two opposite ends of the spectrum. But here is the reality as I see it. If you're here now listening to this broadcast, you're the last of us. I know that on-chain activity has stayed very high. I know that stacking has remained very strong. That's simply because more people stuck around during the bear market compared to the 2018, 2019 bear market. But if you're here now, you're at a time when volume is dead. Volatility is the lowest it's ever been. Volume is some of the lowest it's ever been. Only the hardcore believers are left stacking Bitcoin, Ethereum, whatever top coins, Chainlink, et cetera, et cetera. Retail's not here. Everyone doesn't know yet. They will. They will. They'll find out. They'll figure it out. They'll come back for exit liquidity. They'll buy the top and sell the bottom for the next cycle. This massive slowdown in volatility, the massive slowdown in volume, again, the market is a powder keg right now. And it's not going to take a lot for an insane move in this market for things to either pump or dump in a very dramatic fashion, as it probably will happen. Obviously, we're hoping for the upside based on everything that we've been discussing here. But you never know. We are the last of us. We are the survivors of the 2022 bear market, the 2023 start of something new, hopefully. Now I want to discuss with you how to make your first $1,000 in crypto. And look, whether you've been in crypto for a while, whether you have just bought your first coin yesterday, I hope that there's going to be some value in this conversation for you. The main points of what is required to make money right now in this market. Because the reality is that a lot of money has already been made this year. A lot of people have been making a lot of money so far this year. And look, to an extent, making money in crypto, it's not necessarily rocket science. However, it is a bit of math, and I'm not a math doctor, obviously. None of this is professional math doctor advice. Math is hard. You can lose all of your money. So keep that in mind. Keep that in mind. Nothing is certain. However, if you want to make your first $1,000 in crypto profits or whatever it might be, there's a lot of tried and trusted methods that people have been using this year in order to make money in the market. So first, for example, we can realize that we are at a stage right now in the market where even a small investment into some top coins can make huge returns as the cycle progresses. We're talking 5 to 20x returns here. Bitcoin from here, maybe 5x up to 150K, right? 5x return, pretty good. Maybe it gets up to 180K. I've seen more bullish predictions, but I don't want to get caught up in being overly bullish this cycle. I made that mistake last time. It cost me a lot of money. And obviously, hey, I cashed out plenty, but like could have cashed out more, right? But let's say Bitcoin 5x from here, 150K. Ethereum, maybe it does a 10x. Maybe Ethereum goes up to 20K this cycle. I would not be surprised. Maybe a more reasonable price point, maybe 15K. So we get a, what's that? 7.5x return on Ethereum compared to a 5x on Bitcoin. Something like Chainlink could do a 10 to 20x, to be honest. Got Chainlink bag, got bags, all that stuff. Bitcoin, Ethereum, Chainlink. The narratives are there. They just haven't taken off in a big way yet. So the ETF narrative, man, when we get ETFs approved, holy cow. The Ethereum burn narrative, it's there. The Ethereum layer 2 narrative, it's there. Chainlink, global dominance, it's there. It's there, man. By the way, did you see this crazy Chainlink news just while we're mentioning the old Chainlinkaroo? This is pretty nuts. So as Chainlink God points out, some interesting activity happening on the CCIP testnet, Australian dollar digital coin, New Zealand dollar digital coin, Singapore dollar digital coin. Multiple transactions bridging stable coins between the Ethereum testnet, the Avalanche testnet, using Chainlink's CCIP burn and mint technology. The fees were paid in Link coins, by the way, in case you're curious. Just some of the world's big banks, some of Australia, New Zealand's biggest banks, using Chainlink for their cryptocurrency payment solutions. I dig it. I dig it. That's awesome. Second, stop being lazy. Go get airdrops, guys. Come on. Come on now. Come on. Go hunt those airdrops down. Look, people have already made 4 figures. Some people have made 5 figures. Some people have made more just in 2023 hunting airdrops. And this is like some of the most broadcasted information out there. We talk about airdrops every single week in the newsletter, thewealthmastery.io, link in the description. We talk about newsletters. We talk about airdrops constantly because airdrops make money and they're a pretty easy way for a regular investor who might not even have a lot of startup capital to actually make money in this market. Some of these you can do for free. For example, a testnet. You can do a testnet for free. Now, testnet's an early blockchain or an early perpetual exchange, whatever it might be. They want testers to come in, play around on the testnet, look for bugs, et cetera, et cetera. You can get rewarded coins in exchange for doing that. Or maybe you need to go out and use one of the earlier networks, ZK Sync, Linea, Coinbase's Base. You can go out, use these chains, use the DeFi protocols, do some swaps, provide some liquidity, buy an NFT, but you have to bridge your money over there. You have to get on chain. You have to get your MetaMask wallet set up. You got to get that MetaMask wallet funded. You have to go and connect to this network. You have to use the official bridges to get money across. Then you have to go and do some swaps. Then you have to go and provide some liquidity. The path is well worn. The information is well broadcasted. And yet, most people still miss out. And I was blown away. And this is a fact. I was blown away by the Arbitrum airdrop. It was one of the most telegraphed airdrops in crypto history, I swear. We were all talking about it nonstop forever. And yet, only a tiny percentage of the total amount of crypto users actually showed up and did anything. I think there was 300,000 addresses that qualified for the Arbitrum airdrop. Of those, probably half of them were the same people. So what, 150,000 unique users actually took the time to go over and do something and get the free money? It's crazy, but it's out there. You just got to put the work in. Third, this is another stop being lazy one, but try out new chains. I've been trying out a lot of new blockchains recently. In the last couple of weeks, I've tried out the Mantle Network. I have tried out Linea, and on my list of things to do this week is to use the official Coinbase bridge and bridge some money over to the base chain. ZK Sync as well. I'm playing around on ZK Sync. 4 Ethereum layer 2s, all of which could have an airdrop. But beyond airdrops, a lot of money is going to be made by early on-chain apes. The people who are out there hunting for these early coin narratives, the newest decentralized exchange launching on any of those 4 networks I just mentioned, the new money markets launching on any of those 4 networks I just mentioned, the new perpetual swaps exchanges launching on any of those 4 networks I just mentioned, the new DeFi farms, other gems, NFT marketplaces, whatever there might be coming. A lot of money was made on those. Don't believe me? Look at what happened to the Arbitrum network. Arbitrum network launches. We start seeing a lot of native applications being built on top of Arbitrum. Radiant Capital, from the first time we mentioned it in the newsletter, it's gone up 10x. Plus staking rewards for everybody who's staking that. Grail, another one, that went up huge. I don't even know. Huge gains were had on some of these early DeFi Legos on these chains. And look, some of the existing players are going to branch over to these chains. They're going to be on all these chains, expanding their footprint. But watch out for those native players because they're the ones that potentially have that really big return potential for early apes on chain. That, of course, leads me to number 4, which is staying on top of narratives. What's it been this year? Meme coins, AI coins, liquid staking coins, the renaissance of DeFi 1.0, coins like Maker and Synthetics coming back to life. On-chain perpetual swaps, big deal from GMX to Gains Network and 10 other new exchanges that have launched. Layer 2s, all layer 2s we've already mentioned, as well as other layer 2s, Arbitrum and Optimism and on and on and on. We cycle through all these narratives, and it's been a bit quieter in the market, obviously. But we're still cycling through these different narratives. We're still looking at different ways to make money in the market. People are hunting down every possible opportunity. And if you're staying on top of those narratives, you're finding out about narratives early, not late, then you have real potential for making money. A few $100 invested can easily turn a big profit. A few $1,000 invested, right? But you've got to be early. And you've got to take profits. 2 critical things to do. Be early, take profits. Doesn't mean you have to sell 100% of your position. Get your initial capital back out. Maybe put some money in your pocket. Take the missus out to a nice dinner, whatever it might be. Nothing wrong with doing that. Even now, even if the market's going to go crazy in 18 or 24 months' time. Some of the coins that people are aping into right now, making money off of right now, may not be here in 18 to 24 months' time. It's just the way it is. It's not to say that those are all rug pulls or they were all scams. Stuff happens. Exchanges get hacked, on-chain exchanges get hacked, and people just lose all faith in them. Developers fail to deliver stuff. Teams quarrel and break up. They sleep with each other, and then they can't work together. You guys know how it is. It's what happens. But if you're a latecomer to narratives, you can basically count on one thing. You are going to be exit liquidity. So by the time everybody on your feed is talking about a narrative, it's probably too late. You need to get in early, which means you need to keep your nose to the ground and keep looking for opportunities, keep looking for new opportunities in the market. Fifth, use your assets. Again, this is the don't be lazy one because way too many people do this. Did you know if you take 20 grand, I know not everybody has 20 grand, maybe do the other stuff and get your 20 grand. You take 20 grand, you buy 20 grand worth of Ethereum or Cardano. That would get you $1,000 a year in profits at current prices and staking rewards. But you got to go stake coins, man. Right now, only 21% of Ethereum staked, something like that. 20%, 18%. It's crazy, man. Staking is a well-worn path to riches. And of course, once the bull run comes back, if you're saving your staking rewards, they can be worth 10 times that. Or even if you're just selling your staking rewards once per month between now and then, well, when then happens, 18 to 24 months from now, those staking rewards are suddenly worth 10x. Feels pretty good, man. Suddenly you're making 50% per year based on your initial dollar value that you put in. Sixth, of course, we have trading to talk about. Obviously, this is something that requires a bit of skill, a bit of education, a bit of patience. It's not as easy as just, I'm going to go trade and make a bunch of money. Doesn't work like that. Nope. But here's some math for you. If you do 10 trades at 10% each, spot trades, no leverage, you're going to double your money. That's assuming, of course, you take that 10%, you don't reinvest it in the trade, you take it, set it aside and say, there's my winnings. And you take your initial capital and do it again. Of course, you have to win 10 times in a row in order to do that. Easier said than done. 10% wins at 2x leverage. Again, taking out, not compounding, you'll double your money. 10x leverage on a 10% move will also double your money. So that's the potential of trading. Obviously, a lot of people make a lot of money trading. Most people lose most of their money trading because, again, they don't educate themselves. They don't take the time to learn the skills and they have no patience. Their own psychology works against them. But if you can actually master those things, there's money to be made in them there are hills. But the reality is a lot of people are going to lose a lot of money. And it's just the way it is. You can try and deny the reality of the markets, but the markets work like this. The markets are a method of transferring money from the impatient over to the patient. And that plays out across all time frames, across all asset classes. Unless you literally buy something and hold it forever. Maybe some stock indexes or dividend stocks might fit that. Bitcoin might fit that, for example. But for the most part, people are going to screw it all up because they're going to come in and do all the classic mistakes. They're going to buy high and sell low. They're not going to start buying until Bitcoin hits a new all-time high price. By that point, it's already too late. Shouldn't be buying then. Should be take money off the table at that point. They're going to buy the top. They're going to sell the next bottom. It'll be even crazier next market cycle because more money will have come into the market between now and then. The next market cap high is going to be what? $7-8 trillion. And a lot more money is going to be lost from the peak to the bottom. It's just how it works. I don't make the rules. This is just how markets work. And you either get on board with that process or you're going to get run over by that process. You need to buy low, sell high, not the other way around. That's what most people do, and that's why most people lose. A lot of people also focus too much on the short term. And look, we talked about some short-term plays here, chasing narratives and stuff like that. If you're doing that, my thought would be to not do it with 100% of your portfolio. Have portfolio plays that are going to be those safer, 10x return potential coins in the next cycle. Take some smaller money and play around with it. That's what I do personally. Can't tell you what to do with your money, of course, but that's what I do personally, and it's worked out okay. A lot of people too are going to get chopped up in this directionless market. I said, hey, trading is a way that people can make money and make their first $1,000 in profits. Yes, it is true. But a lot of people do it at the wrong time. I haven't made a trade in weeks. Hasn't been much to trade. It's directionless market. Volumes are down. Volatility is down. People keep trying to do something, and yet not a lot going on. Wait for the trend to be clear, and then you can hop on board the train. But a lot of people get chopped up. They're just wrecking their portfolios, chasing the new hot thing, hopping into trades, and they shouldn't be hopping into trades, overusing leverage to try to make it all back. Just getting wrecked, man. Don't do it. Wait for the market to establish a direction. Of course, a lot of people don't take their security seriously enough either. Again, classic mistake. The amount of money that gets lost on people clicking on dumb links. Like if you're Googling something, man, usually the top link is a scam. It's crazy. I don't know how Google lets this continue to happen. More often than not, the top link for whatever it's going to be is actually going to be a scam link. And of course, we see those shared all the time on social media and stuff like that, et cetera, et cetera, et cetera. You got to be careful with your coins. Take your main coin stack, put them in a hardware wallet, and never use that hardware wallet to interact with different contracts. Have a MetaMask wallet set up and use that for playing around with stuff, and have a couple different addresses, one for more higher risk things, one for lower risk things, et cetera, et cetera. But take your security seriously. Most people don't. They lose a lot of money. Be careful, of course, as well about buying hype. This comes back to the buy high, sell low, but reality is a lot of people chase hype. They don't jump into things until it's really, really hyped up. Oh, AI coins, new paradigm of money. That's when the early buyers are selling. You're going to be exit liquidity. Meme coins, Pepe is the new paradigm of money. By the time it reaches a multi-$100 million market cap, it's too late. People are already selling. You're going to be exit liquidity again and again. Don't set yourself up for that situation. Of course, it comes back to a lot of people not doing their own research as well, just hopping into something because they saw me mention it for 20 seconds in a stream, or they saw somebody on Twitter mention it, like 3 words in a tweet. Well, that they tweeted out the cash tag. That must mean that that's the new paradigm of money. I should run out and put all my money into it. Oh, you have got to do your own research. It's so important. And I know sometimes it's tough because you don't always have the time that you feel to do that. But if you don't have time to do the research, maybe you just have to miss that one. Look, there's always opportunities in this market. Every day, there's new opportunities. You don't have to chase everything. You don't have to feel that pressure to chase stuff because there's always going to be a tomorrow if you preserve your capital. If you lose all your capital, there may not be a tomorrow for your portfolio. And of course, people invest too damn much in this market. And I get it. I get it. The potential is insane. The returns potential is insane. The potential to bet more and bet harder and bet bigger is absolutely there. But it doesn't mean you should do it. Invest responsibly. You can lose all your money. Hacks happen. Exchange hacks, smart contract hacks, coins go to zero, coins rug pull, all this kind of stuff. It's a brutal market out here. You have to manage your damn risk. And of course, the one thing, write this down, write it down, get a tattoo of it. I don't know. Do something. Take your profits or the market will take them for you. There cannot be a truer statement in the history of markets. When you, at some point, are sitting on big money, take the damn money. Or at least take some of it, man. You don't have to take 100% off the table, but take something. Remember to take profits. A lot of people will not. And they will miss out big time. Okay, let's open up the floor. Let's do some conversations. Let's do some Q&A session here. Let me know your questions on what you want to talk about. Here we go. Number 999, first one. Thank you for the super chat, by the way. What are your thoughts on Bioconomy? No, look, I haven't actually looked at Bioconomy in a while. I can't give a good opinion on it right now. I was a private sale investor. I've already sold my coins from that. That being said, I invested in it because I thought it was a damn good coin. So I don't have an updated opinion. I haven't been following the recent news. Sorry, but I was definitely a big fan of it when they came out. I think the value proposition for what they're doing is very important for the crypto space. So there you go. But I don't have any updated opinion. I haven't been following news super close recently. So, okay. Here we go. Pew Pew Poom 2. Hey, another one from Pew Pew Poom 2. Welcome back. Two-parter again. How do you get in early on new coins? Where do you find them by the time they hit Uniswap? It's already pumped. And do you ever worry about your getting wallet hacked on test nets? Okay, yes. So 2 questions. First, how do you find coins early? It's tough. Often the earliest buyers of a lot of coins are a tiny group of insiders. That's the reality of how this works. Things will get listed on Uniswap pretty early. Usually Uniswap is the earliest place to buy things. So keep that in mind. By the time something gets listed on Binance or whatever, it's usually too late. That's the exit liquidity time. So you don't really want to run and jump into that. So keep that in mind. But yeah, you got to keep your ear to the ground, man. You got to keep watching for new listings that are happening on CoinGecko, on CoinMarketCap. You have to stay into those different Reddit groups and stuff like that, and realize that if you're buying a coin with less than $1 million market cap, you're taking a high risk. Never put all your money into that because you can lose all your money very quickly. Lark, what are your thoughts on Caspa? I don't have a great opinion on Caspa. We did do a research report on it a little while ago. We posted it on Twitter, I believe. I have not looked into it in any great depth since then. I don't currently own any of it. I know a lot of people are very excited about it, which is fantastic. And I know the price has been going absolutely crazy recently, but I can't really say much more than that. If you look it up on Twitter, you can find our thoughts on that. We did a report on that. Must have been 4 or 5 months ago now. Great thread if you're a beginner looking to know more about Caspa. So you can go check that out. But I don't have a great opinion at the moment. I'm sorry. Okay. Lark, what is the hardest thing you learned in this market? Take your profits or the market will take them for you. It's a tough lesson I learned in 2018. And to an extent, I had to relearn that in 2022, because while I took a lot of money off the table, I should have been a lot more disciplined with myself. And I'm making a plan to be more disciplined with myself this time. As I mentioned previously, when the next market cycle comes up, I'm going to probably sell all of my altcoins, including my Ethereum, and probably just keep like half to 2/3 my Bitcoin. General plan, but we're going to be breaking that down in a future stream in much more detail, of course. Ricardo asks, what exchange do you use for your DCA purchases? Ricardo, I've been using Binance primarily for my DCA purchases, but yeah, it depends on where you are and what you do. In terms of if you're thinking, oh, what exchange should I use? I can't answer that for you, Ricardo, because it's really going to depend on where you live. So if you live in the United States, I mean, Kraken's probably a pretty good choice. Coinbase, of course, but they have a little bit higher fees than Kraken, which is why I say Kraken over Coinbase. Although I hold Coinbase stock, so if you are going to buy over on Coinbase, I guess that does well for my bottom line because the stock's going up. But regardless, chase those lower fees, man. Kraken's a great exchange. They do lower fees than Binance. If you're in Europe, it's going to be different again. If you're in South America, the answer is going to be different again because it depends on what's available to you locally. So look around the market a little bit and make sure that you're not paying any more than half a percentage point in fees. Ideally, you'll be paying 0.1% or 0.2% at a maximum in fees. So keep that in mind. That should be a pretty competitive rate, because when you're paying like 1 or 2% in fees, which some exchanges charge, yep, yeah, not good. Jack Quack, Moonbeam Parachain coming to fruition soon. Seems the more I buy and stake, the lower the price drifts. Hey ho, first 4 years. Yeah, I know, man. I know. It's been a rough ride for Moonbeam. I've got a huge bag of Moonbeam. Yeah, we'll see how that one goes. It's interesting how there was so much hype around Polkadot and the parachain auctions happened, and the hype just dried up real fast, unfortunately. And maybe we're going to see that hype come back around. I know there's been a lot of talks about Polkadot 2.0 already and a big revamp of the tokenomics. And I still think that Moonbeam has great potential as being the Ethereum of the Polkadot ecosystem. I have a bag, of course. So we'll see how that goes. Of course, as always, by the way, if you want to know my full disclosure statement about what I have in my portfolio, what my venture investments are, you can find a link to that in the description of this conversation. So go ahead and check that link out and you'll know what coins I have, what are my conflicts of interest, what are my venture capital investments, so on and so forth. So go and check that out. Tim Musician, I think my worst play was buying Coinbase stock during the initial offering. Yeah, I bought too soon after listing. Of course, Coinbase, the coin stock, has been very much linked to the wider cryptocurrency market, pumping when crypto pumped, dumping when crypto dumped. Now, I've got a big bag of coin stocks, and I think that the potential is very big for that to play out very well in the next crypto cycle. So I don't want to go too crazy on price predictions for coin. I think $1,000 is not necessarily like insane, maybe a bit high, but not insane. I will be watching though and fully liquidate that position around the same time that I think I'll be selling like my altcoin position. right? So when Coinbase gets back up to trending to like number one on the App Store, probably got about a week or two to get out of that and basically all of your altcoin positions in the market. Unless this cycle's different. The cycle can always be different, of course. But historically, that's kind of been a pretty good time to get out. Here we go. Thoughts on Polygon Matic? Big fan. Big fan. I don't currently hold any Matic. Made great money on it in the last cycle. Big fan of Matic. I would certainly have no problem rebuying a position in the future. The team is probably one of the hardest working teams in crypto. They've been releasing crazy amounts of tech updates right throughout the bear market, which is impressive when you realize everything else that has been going on, basically. And a lot of teams have just run out of money or exit scammed or whatever else it might be. Polygon continues to be at the forefront of adoption and bringing big players on. They brought on Starbucks, for example, and they brought on, was it DraftKings? We were talking about this in the last stream, how DraftKings, if it was a chain by itself, it would be one of the biggest volume chains out there. Like crazy stuff, man. Crazy stuff. So Polygon is one not to fade by any means. What do we got here? Tanya, Yield Games keeps pumping. I had some, but I sold. Well, Tanya, it happens. It happens. I'm reminded of that meme that it's the coin I was thinking about buying goes like this up, right? The coin that I just sold goes up, and the coin that I hold on to goes down to zero. It's the way it is in crypto. I don't know why YGG's pumping price on big partnership or something like that. I haven't seen the news. It's impossible to keep up, of course, with what every coin is doing. Holy cow. But it happens. Don't beat yourself up. This happens in crypto. So maybe the only question to ask yourself would look back and say, hey, why did I sell that coin? Did I give up on the gaming narrative? Did I give up on the guild narrative? Why do you use a guild coin, of course? And look, there's some of my gaming bags that I've capitulated on during the bear market. Games that I think just don't have that great of a future anymore, or games I'm just like, this, there, the other reason they just haven't really done that much, or a guild that hasn't done that much, or sometimes, man, they're done. They're done. A lot of, I don't even know why companies did this. It's so dumb, but a lot of companies actually gave their treasuries. So all the money they raised for their ICOs, they gave it over to FTX to manage their money for them, because FTX was promising, hey, give us your money and we're going to manage it for you and make more of it for you. And hey, everybody trusted FTX at the time. And so all these companies gave all their money over, and then all their money was gone. Number 999. Thanks, Amber, for the super chat. What's your thought on the Wall Street meme token? I literally have no opinion on that. I know nothing about the Wall Street meme token, and yeah. Sorry, don't have any opinion on it. I've heard of it, but that's about it. Eric, are you holding a ramp or did you sell it? I sold my ramp. It was a while ago now, actually. Yeah, ramp was a crazy one. It's good in the last bull market, but one of those ones just kind of failed to really get that level of adoption. It was doing all the right stuff too, and it just didn't really make it. Again, if you want to see my full portfolio disclosures, you'll find a link in the description of this conversation, so go ahead and check that out. But no, I don't currently hold my ramp. I think we've started buying ramp here on the channel. I don't remember. It's such a long time ago. It was back in, was it 2020? The price was like 2 cents and it ran up to like $2 or something like that. I don't remember the exact numbers. It was a pretty crazy one. And I did not sell the top on it. In fact, I held a pretty big bag of it for quite a while, and then things just started cooling down, and I kind of lost a bit of, sort of interest in it, as I saw it not really catching on in the way that I wanted it to, right? When you enter a position, you have certain expectations where they're going to go, the kind of adoption they're going to get, the importance that they're going to find within the space, right? And I haven't looked at ramp for a while. Maybe they have found some broader adoption compared to what they had back in the day. But at that time, new projects are coming out and doing much better than, much quicker than them, so it didn't really feel like they were hitting that right note for me. So that's why I sold that bag. Siri, Arb is cheap to use and fun. I agree. I use Arbitrum all the damn time. That's a good time. Ty, what do you feel about Dogecoin? You know, meme coins in general. Never been a big fan. I appreciate them. I think Dogecoin has done more than other meme coins, obviously, and has a different value proposition being its own blockchain, whereas a lot of these other meme coins are just tokens built on top of other blockchains. I think the thing that's going to move the needle for Dogecoin is, of course, Elon Musk. It's really all your Doge bags are fully dependent on Elon Musk at this point. If Elon implements Doge into the X app when they launch their financial services for it, it's moon time, baby, for the Dogecoin, at least in short term. So there you go. There you go. That's my thoughts on the Dogecoin. Much wow, so amazed. You gotta love Dogecoin though. Even though I don't own any Dogecoin, I don't look at Dogecoin as an investment. I do from time to time trade Dogecoin because it's a coin that definitely has those cyclical motions to it. Bid Moon asks, well, you're a legend, Lark. Thank you, Bid Moon. Appreciate that. Appreciate Super Chat, of course, as well. Any thoughts on Cadena? No current thoughts on Cadena. We've done a research report on it for the Wealth Mastery newsletter subscribers, so you can go and read that over on our website, thewealthmastery.io. However, I have not looked into it since we did that report in any great detail. I don't currently own any, and it's really one of those things when it comes down to it. Man, there's so many coins. There's so many coins. It's so hard to keep up to date with all the coins and everything that's going on in the cryptocurrency space on a regular basis. I mean, man, oh man, oh man. 10 new coins a day launch that are like halfway decent. More, probably. It's absolute insanity. It's like drinking from a fire hose most of the time. And while we might have mentioned a few coins with Beacon Dana or whatever else on this conversation, you know, the reality is that you don't need to be invested in every coin in order to make money, right? You can choose 5 or 6 coins and probably do pretty well. You can probably do pretty well at the end of the day. So yeah, don't feel you need to chase every coin out there, guys. If you've done your research on Cadena, if you think Cadena is going to be the new paradigm money at some point, well, then, you know, may your bags pump to the moon, my friends. Anyway, that's it for today. Thank you very much for joining the conversation. I appreciate your time. As always, may your investments be fruitful and may you make lots of money in crypto. And I'll see you next time. Peace out.